Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 28th, and I'm Michael Boutros. Good to be with you guys this morning. Peter, Pooja, Steve, Tom, we got the whole crew. So great to be with you guys. DJ, Gary, Kelly, always a pleasure. So on the docket for today, US dollar is finally coming into that trendline resistance that we've been talking about for the descending median line that extends off the yearly high. We'll talk about that. You're seeing a little bit of an interruption on the dollar rally. Could be something more significant. We'll look deeper into price action. We'll take a look at dollar yen, which has also turned ahead of that target that we talked about last night. So testing support now. I'm not really sure what to do with dollar yen, but we'll take a close look. Dollar CAD, picture perfect reversal so far. Let's cross our fingers off that major resistance that we've been looking at for the last 2 days. So initial reaction looks good. Still do like it on the near term for a little bit move lower. We'll take a look at gold, which also came into that support level that we noted last night, seeing a little bit of a rebound there. Aussie dollar, Kiwi dollar, Euro dollar, and Euro pound from all the updates that we covered earlier this week. If you guys want, if there are requests here, we'll take a look at Euro Kiwi. I know I presented that on Sunday. It hasn't really done anything. It's continued to hold the weekly opening range pretty tight. But if there's time and questions, we'll take a look at that later in the session. All right. If you have any questions, as always, or trade setups you want to review, feel free to throw them on the message board at any point. So here's what the charts look like. Let's jump right in. Daily for the DXY. So the rebound, or the break, rather, we should talk about the breach of the weekly opening range, of the monthly opening range. Excuse me. We talked about that yesterday. Targeted the 2016 low day close at 93.06, and then 93.60s. Remember, 94 was the level that we said, look, if this thing breaks the upside, we could see 93.60 and 94 in a hurry. 93.60 looks like it may have held at least for now. Momentum rebounding right at 60. So if the broader downtrend is going to remain viable, we should be encountering stronger resistance at these levels. That being said, I do want to start off the session by noting to everyone here in the room and reminding everyone that tomorrow we're closing out the month, closing out the quarter. A lot of end-of-month flows, portfolio adjustments can really offer up some wicked price action. So not our favored environment for intraday trading per se. I don't want to sway you away from any opportunities that you may see, but definitely a good time to lower your leverage. Definitely a good time to be a little bit more meticulous on your entries, and try to just. For me, it's a time where I kind of just sit back and re-examine, let's say, what our near-term perspectives are. Okay, so anything you take over the next 48 hours into the close of the week, just stay nimble. There's no point in really getting heavy on any specific trade until we get deeper and just close out the month and start out the new quarter on Monday. So that being said, here's what the intraday chart looks like. So you had a couple of tells here that you're seeing some price action getting a little tired here as you started to mark some divergence on that last high. Even this high, it's basically an equal high, so it wasn't really strong divergence, but certainly right into that resistance region. Again, the June low day close was 93.50. The median lines were somewhere around 93.60. Kind of probed right into it and reversed lower. Now, this is former channel resistance. I don't want to really stress it. It's just a parallel of the slope support. You saw that hesitant break there. It offered support yesterday, and we're pushing below it now. It has me thinking that you still have this thing back drop into 93, 92.52, former support, or former resistance, I should say, then support yesterday on the way up. So that's sort of your initial level of support. And for me, it's a break below 92.92, the bottom end of the zone. That would suggest you have a bigger reversal at play here, and dollar is kind of going to slide lower. So watch for this region here, support into the U.S. Open. Okay, topside break, like I said, you can see 94 real quick. I don't necessarily favor that move here into the close of the week, but just know that that's the risk on a breach of the highs that we made last night. Okay, any questions on the DXY? Pretty straightforward. Again, here's what we look like on the DXY earlier in the week. Okay, we were talking about the fact that we broke above this, pulled right back into support. If the breach was to stay viable, we needed to hold that, and certainly we did. So the next upside target, 93.52. Divergence, pullback. Look for support right back at former resistance. So what is the implications? Hey, D, good morning to you as well. What are the implications for the euro? Obviously, the biggest heavily weighted counterpart on this index. Let's take a quick segue into that. So if there are no other questions on DXY, that was number one. Number two will be euro. Here's what the euro looks like. And here's what we've been tracking on the euro for the last couple of days. Last update on that was the 25th. So the break below this slope is really the focus for euro. Downside targets at 117.79 and 117.54, both levels of interest we noted for possible entries on the long side. So we broke 1780. We're turning just ahead of this. Again, you had the same signal that you had on the daily on the DXY, with price action making a lower low, divergence on the momentum signature, and then the pop higher. Again, now we're checking near-term resistance, DXY, checking near-term support. So very interesting setup on both of these. Again, if we were to get a pop higher above 1780, tack on a quick retracement. Let's just see what this looks like of the decline. And it puts a 38.2 right at the same exact level that we were already highlighting, which is that swing low from back on FOMC, 1860, converges on former slope support. So that's in the event of a recovery if we were to break higher in the euro dollar and give us a larger rebound. On the daily chart for the euro, it's important to remind us where we were. We looked at this yesterday. It's a little bit cleaner on the weekly charts, and certainly I'm sure Jamie will go over some of this with you later today on the weekly strategy webinar. But a couple of things to note, where the euro turned from, although it didn't quite reach it into that last intraday target we were talking about, on the weekly chart, it's the 50 line, okay, of the current ascending median line formation that we've been working with for off the lows from 2015. Okay, again, we talked about this. The 50 line here was a perfect launching point for those rallies back in May. The upper median line parallel was exact and precise resistance on this stretch higher. Okay, and the pullback finding support right at the 50 line. So sure, yeah, we can get a bounce here. Add to that, it's the end of the month, the end of the quarter, and all that good stuff. So don't get too, again, tied up in anything too heavily at this point. But I did want to hire this near-term support. Now, does that mean that the euro is going to just see resumption right through the highs? Not necessarily. Is the near-term risk for a little bit of a rebound here? Yes. Do I necessarily want to get long the euro? Not really. Okay. So I'm kind of waiting to settle to see how this reacts. If we were to pop higher, an 1870 print would actually be an interesting area for possible reentry on the short side again. Again, very clear pivot in price. You had the monthly opening range lows there. The monthly open is just higher. So you kind of got a really sweet spot there if we were to rally a little bit higher in the euro to try to push this lower. Near term, though, here's what it looks like in the intraday charts again. If we were to pop here, there's that 1860 level. Possible reentry for the short side move. On the downside here, I still wouldn't get too aggressive. Past 1680. Yesterday we talked about 17 is probably where I look to wrap up any shorts that I'm holding on the euro, just because of, again, that slope of the near-term chart has that right there. Lower down into 1680 basically is going to be a basic 236 of the entire advance. So the levels are super clear. Heading into the U.S. Open, again, risk for a little bit of a recovery here, but as long as we stay below 1860, that's where our bearish invalidation level now gets dropped from the weekly open, till 1860, and that's the new bearish invalidation level we'll work with. Any questions here on euro? Things could get pretty tricky here heading into the end of the week, so use caution. Again, I see some new names in here today. A quick reminder for anyone who's new to the room, there's that camera button at the top of your GoToWebinar screen. Go ahead and click on that if you want to take a screenshot of any of the charts you see presented, if you need to reference them later in the trade session. So that's DXY and euro. Any questions? All right. Let's jump back to yesterday's update. I do want to cover the dollar yen, dollar CAD, and gold. Here's what the abomination looks like, or here's what it looked like earlier in the week. We were talking about this possible bull flag scenario. If we were to break to the upside again, we would be looking for a short exposure. My ideal spot was 1357. Now, we didn't quite get that high. We got through 13, but we didn't get quite a tag of that trend line resistance there, or upper median line parallel, before this thing turned over. Pooja says, if euro does come into resistance levels at month end, would you take a short? Good question, Pooja. It depends how the price action develops. If we were to get sort of a washout tomorrow, and then price really starts to rip into this region, yeah, I would be interested in looking for some possible near-term exhaustion with a stop against the weekly open. But to be quite frank with you, even if I were to take a position like that tomorrow, it would be very, very light on leverage. It'd be a quarter of the typical leverage that I work with. Just because you need to recognize the time of the environment or the time of the month that you're trading in, or the time of the year. And again, these quarterly, monthly ends, for me personally, I've just over the years known to kind of shy away, unless it's a very compelling setup. So does that help, Pooja? I mean, at the end of the day, this thing made an objective break of the monthly opening range. It is the monthly open. I mean, or the monthly opening range lows, rather. If we were to get a recovery into that region, resistance is resistance. So yeah, I'd be interested in possibly taking a position on that. Okay. Cheers. You're more than welcome. Okay, so dollar CAD, or excuse me, dollar yen. Here's what Yenski looks like. So, what should I start with here? So we started again on the, what is this, the 25th, talking about that descending or bear flag possible formation for that rally. Fast forward to last night, and here's what dollar yen looks like. Obviously, we removed that channel, that descending or flag, bullish flag did break. You got that topside pop. This was the region of which I think would have been a really sweet spot if we had gotten the chance to get up there. The rally failed again ahead of that median line, and we're certainly trying to make a move here below 1250 as we speak. So for me, again, kind of a wait and see. If we were to see this thing break, keep in mind, this is the objective weekly opening range. So that dictates you would look for a late month or late week, break of the weekly opening range, which has you looking for a late week high. Wouldn't be surprised if we still try to stab into that before we turn over. At the end of the day, I do have support right here at 1252, but it's really the weekly open. Okay, in the weekly open, it comes in at 112.14. If we were to break below that, I think you're on your way back into 111.40. Trendline support, weekly opening range lows, both converge right down here. So I'm flat right now. If we get a spike into this region, I'll be looking for exhaustion. Okay. If we do see a breakdown here, I'm not going to start chasing it. I'd really need to see a little bit more of a traction move below the weekly open here to kind of invalidate the weekly opening range break, which does call for a late week high here. Again, the daily chart, so get a little broader of a picture. Basic trend line resistance, not really stressing this because it's only a 2-point touch, but certainly yesterday you saw that we closed right there, literally right there. Bring it into a line chart, give yourself a little bit more confirmation. That's a clear-cut hold. So again, there's a lot to suggest that, yeah, maybe you got a little bit more of a setback to go before, or maybe you have a bigger setback to go rather in dollar yen here if we're not able to clear this region. Obviously, divergence in momentum, holding those highs as price action makes a higher high, further highlights that risk. Okay, don't get too comfortable until you clear 1212 or 1213. Remember the weekly open, also 200-day moving average. Okay, and former swing highs, nice pivot in price. So again, a trade where the levels are clear, but again, as we always say, just knowing the direction is 50% of the game. How we go effectively to trade this, is there an actual trade setup for me here? Not necessarily. You're right slap in the middle of the weekly range. So let's see how this pivot at 112.52 holds. If it does hold and you see that rebound higher, look for 1367, 1357. Again, in my mind, it's still a beautiful spot to try to look for a little bit more of a resistance on the near term. So that is the abomination, also known as dollar yen. Still not my favorite trade, but levels are clear. Let's jump into something that does look good. Here's what the dollar CAD looks like from last night, and then here's what it looks like this night. We've been following this trade very, very clean. Now, I got stopped out. I jumped into a short as we were probing into 24.15, 24.20. Once we failed and pulled back on the rally here, I tried to jump in again against that high. So I did take a pretty quick stop on full a lot, which did hurt. But nonetheless, next level up, still looking for exhaustion. Okay, we were wrong on that call, which was a bigger pivot in price irrespective of the fib levels. If you look back at that 92.19 level, 24.19 level, 24.16 level, it was a nice pivot in price, and you had a pretty significant Fibonacci consideration there as well. So the fact that we broke through that, it was also a breach of the weekly opening range high, did have me looking higher, but this was the sweet spot. Okay, and you could see that highlighted a little bit more clearly. Again, guys, the weekly chart, the daily chart is never more than a click away. So if you see me presenting just at 120, just go ahead and click on the previous update. You'll see it most of the time. So here's what the dollar CAD looked like, and there's that spot. So on the longer term time frame, it's a basic 236 retracement of the entire year's range. Former slope support for a longer term median line formation that we've been following in blue there, and just off this year's highs, remember these purple lines, a parallel, perfect pivot, acceleration, parallel, perfect support, break saw acceleration, resistance, resistance. That's right in this spot too, just around 25 handle. So a big spot. And again, if the downtrend is to remain viable, this is the hard median line or the broad formation. You'd want to see this confluence hold. Okay, bottom line. Here's what it looked like on the 240-minute earlier in the week. Again, initial reaction had me looking for a rally to fade. It didn't work. It broke right through, and now we're trading right here. And this is, I think, where you want to be a little bit more aggressive on trying to see if it holds. Take it back to last night's update, and here's what dollar CAD looked like last night. Again, the bottom end of the range started at 124.72. A little bit higher was that 125 region or so. Here's what dollar CAD looks like now. Okay, picture perfect. Again, really nice. There was a lot loaded up here, aside from the fact that you had those median lines. Again, that slope off the high, the broader median line formation. This is off the 2016 highs. Okay, a modified pitchfork. Very nice slope on it. And that median line there. Also, I wanted to highlight that the monthly open, here's your monthly open, the red dots here, those purple dots, all converged right here. Big region, okay? Momentum, turning right ahead of 60. So look, I don't know if this is going to be the high in dollar CAD, but all I do want to know is you want to be mindful of any long exposure while below this region. If this were to pop, there's nothing to stop this from going straight up into last month's late month high, and that's basically 126.60. A lot of room, over 200 pips. So big region. If it's not going to move lower from here, there's plenty of upside to go. But this is going to be something that you want to pay attention to closely heading into the monthly and weekly close. Here's what it looks like on the intraday chart. Really clean initial price action, 2-hour reversal bar right off that region. 4-hour wasn't quite an outside. And the 30-minute did post an outside. So you have a 2-hour, and I'm assuming the 60 as well, an hour and a 30-minute outside reversal candle off of resistance is pretty strong signal in my mind. So I'm looking lower. You kind of want to see this thing at least at 124.20 to make any sort of assumptions. Okay, that's the break that needs to happen to really validate the reversal off of this resistance range. So any shorts that you have, this is kind of a region you want to pay attention to. Don't get overly aggressive. I would have, my limits are just above that. So even if we do dip, I'm going to be looking to take a portion of that off. But big region. It's just a big technical region. We can't ignore it. And although, dollar CAD's been on a slow grind higher for pretty much the entire month since way back here on the 7th, I just caution you on getting too aggressive. That being said, resistance is resistance. And if the broader downtrend is to hold, this is where a market needs to hold below. All right. Any questions on dollar CAD? Now, again, keep in mind, you're already, 60 pips off the high? So don't go chasing this down here. Daily ATR is not that huge, or hasn't been, because of that chop action we've been seeing. So don't go chasing it back here. But if we were to get a little bit of recovery, I would be looking for exhaustion ahead of 25, okay, with a stop against the highs. That's the only way I'd look to get back into this if I'm not in. But just know that if we do break those highs, sayonara. That'll fundamentally change the technical outlook, at least near term, for a little bit more of a constructive approach. Any questions on Loonie? Keep in mind, we do get those GDP figures tomorrow from Canada. Those are monthly figures, so they're not typically as market moving as the quarterly GDP figures released in the States and otherwhere. So just keep that in mind. That is on tap tomorrow, as well as industrial production, industrial product prices, and raw material price index, which is going to be a low grade release. Don't even worry about that. More so, also, you got to also worry about that. Not the fact that we're just getting those GDP figures from Canada. We're also getting some data out of the U.S. The personal consumption expenditure, the PCE, which is the Fed's preferred gauge of inflation, does get released tomorrow morning. Just a quick look at the core numbers does expect an uptick on a month-on-month from 0.1 to 0.2, but it's really going to be the core year-on-year you have to pay attention to. And the market is expecting that to hold at 1.4% here in the States. So not what the Fed wants to see, right? We want to see that inflation start to uptick for the Fed to really have more confidence to normalize. So until we do, we're going to just be a little bit more nimble on this one. Okay. Guys, give me one moment. Okay. Sorry about that. Any questions on the LCAT before I move off? Going once, going twice, sold. So bottom line, looking lower. I want to see this high that we made an overnight trade hold. Initial target's just above that 124.20 level, and look for a reaction there. If that support level does hold, this thing could have further upside to go. Not my favorite scenario, but certainly what we need to be mindful of. Let's take a look at the last thing from last night's update. I just want to touch base on gold. I don't have any exposure on this again into the close of the month, but I did want to notice or just note or highlight the level that we were coming into as far as the downside was concerned. So here's what gold looked like. Remember, we were working with sort of a different channel off of this high and this high, which had us breaking here early in the week. Remember, this was our our bearish invalidation level is 1304. You did see a topside break and a quick recovery back below. So when something like that happens, it's worth it kind of readjust, reassess the scenario. Again, that brought into account, that trend line brought it up, further highlights 1304 is still the level I'm looking at that we would need to clear on a closed basis to get this thing going back up. That being said, on the longer term, the bigger level now that we've broken these highs is really here. That's 1267 is the 38.2 retracement of the entire advance from the lows that we made last year. And just above that is the 100-day moving average, which has been a clear pivot in price, clear support, and that comes in right around 1270. On the near-term chart, if you look at the slope of the channel, the lower parallel extending off that low also highlights 1270. And again, there's that 618 retracement. This is the retracement of the advance, the near-term advance. And that 1263 is just below that 38.2. So long and short of it is, you're at risk for further moves lower. Okay, and again, objectively, aside from what anyone else thinks, here's the weekly open. You make a low. You test a high, you tested the low, it rebounded for a couple of hours, and the break yesterday does constitute a simple break of the weekly opening range, which again has you looking for a late week low, Thursday, Friday low. So I wouldn't be too surprised to see if this thing dips one more time and try to tag that 1270 or the lower parallel before recovery. But as far as having a game plan here is trying to trade it, you want to be looking for that drop into support, in my opinion, to try to fade as opposed to trying to take this any lower on a short from down here. So levels to be wary of: 1270, 1263, both levels of interest for possible entry on the long side. A pop through 1304 still needed to sort of invalidate the near-term downtrend we're seeing. Broadly speaking, and as I said to you guys earlier in the week, broadly speaking, the broader bullish invalidation level for the entire trade for gold is still down at 1240. So even if this thing were to break down that low, I do think the larger, broader outlook remains constructive. Questions going once, twice, three times on gold. All right, Aussie dollar was also a trade setup that we've been following this week. Here's what Aussie looked like earlier. So, previous update on this was last week, or the previous, update was last week, and we were looking for sort of a little bit of a recovery into the median line start off with the pullback, again, risking a move towards 80.54 and 80.81. If that were to break the weekly opening range highs, sorry, that was last week. What am I looking for here? Okay, 78.20/30 and 78, both areas of interest for exhaustion and long entries on Aussie. That was if we saw a break of that 78.75 level, which we did. 78.75 did give out. Here's Aussie dollar now. Oh, this is the weekly. Sorry about that. Okay, there's that 78.75 level, gave out, broke lower, offered resistance. We took out 78.30/20, and here is 78.03, okay, which is a 1618 extension off the entire decline. You're getting divergence into those lows, price action making a lower low, the oscillator making a higher low, and the initial reaction saw an outside reversal candle off of that support structure. Now, 78.30 has still been holding as rock solid resistance all overnight. So I'm very mindful of that. And I want to see that give out before I start planning any type of recovery play. It did not really have a very clean weekly opening range break, I'll grant you that. But even in such a scenario, you're probing into lows, that we saw back here last month. And I don't want to, be on the short side of this anymore from here, bottom line. If we recover above 78.30, I do think you get a little bit more of a bounce. But at this point, try to take a short exposure at these lows for the month. It's just not something I'm interested in any longer. So softening the tone there for the short side on Aussie. Do think that you find some sort of support near term. A break above 78.75 is what would necessitate, or what you would need to see, let's call it, to mark a larger reversal here in price. Again, the Aussie dollar on the weekly chart, I actually haven't looked at that, also highlights the basic high stretch that you made back here in 2016. That comes in at 78.35. We're trading below that now, but you can see the pivot that we've seen in price here. That was the close, support. Let's see how we do today's close. Obviously, some weekly divergence into this highs does risk the drop for a move lower. And again, if we do break 78.30 or 78.03, excuse me, that low, on the subsequent moves, you got 78.78, which is the November high from last year. And then you got a couple of different things here, which is why I'm not really interested in playing the short, because look how stacked up this is. You have the November high, you have the 200-day moving average, you have the 2016 low high day close, and slope support. So this whole range is like super treacherous between 77.80 and the bottom of that range, which would be 77.36. like a 50 pip range of like, who knows what the hell happens there. And you could see former swing highs, former spike highs, former spike highs, former spike highs, deep push higher, and it's the top of the range. So that's why from here, I know if I get a drop into this zone, I'll be looking for exhaustion. Am I trying to play that short? No, not until the close of the month. Could happen in an instant. Could that be really quick? I don't want to get caught in a washout. So levels to be mindful of for possible long entry in the Aussie if we do drop lower. On a recovery play, 78, 75 needs to be cleared on the upside for a little bit more of a near-term constructive approach. Questions on Australian dollar? That is number 6 on this session. Here's what it looks like on the 240. And again, from earlier in the week. So we've gone through, we're basically tapping this level here right now. Okay, let's jump into Kiwi dollar. Number 7, here is what Kiwi looks like. It's been a couple of boring days, I must say. The break here, if you guys recall, that we were looking at earlier in the week, really should have opened up a larger downside move, in my opinion. The fact that we saw 71.90, 71.76 hold. This is the low day close, if I'm not mistaken. Yes, this is the low day close that we made back here in August. And this is a 100% simple extension off the highs. Now, again, a really stretched emotional high here on FOMC, so I don't really like to use those highs in trying to assess near-term price action, but you've been seeing somewhat of a nice support bounce there. I'm going to scrap that at this point, just for the sake of clarity, and clean things up a little bit. But I must say the risk remains lower, below 72.46 here. And the ideal spot that I would like to see a little bit more of a stronger support hold would be down here. Okay. You got the monthly opening range lows, literally almost to the pip. You have the 200-day moving average. And you have a longer term slope. This is the parallel of that 2015 slope. Let me just maximize this for you. Okay, so the 2015 trend line support. Take a parallel, was perfect touch, perfect touch, perfect touch. Did see pivots on both ends here. That converges on the 200-day moving average in green and also the monthly open. Add to that the median line. I don't know if you can see this clearer. Kind of make this a little bit darker. There you go. The 50 line for the ascending formation also converges down there. There's so much there. So again, maybe another stab lower and then a little bit more recovery. It would be a full round trip of the week of the monthly opening range. But other than that, I'd need to see 72.50 break on the upside to get constructive again. So watch for a break basically of this range, guys. This is the only thing that matters for me on Kiwi dollar heading to the close of the month. It's either a bounce off of 71.45, 71.50 if we're able to get down there, or a breach above the 100-day, which converges on the median line and all that good stuff near 72.40 or so. There's 72.40, 618 retracement of the range from that ascent. Very nice pivot in price as well. Former channel support, now resistance. All line up in the same exact spot as resistance. So again, super clarity on the levels. Don't have that 200-day moving average here, but just know that's somewhere on that 71.50 level. Any questions on Kiwi? All right, last but not least, well, let me also just take a look, Euro Kiwi, we talked about that earlier in the week as well. Honestly, I haven't really paid any attention to it because I haven't really been getting involved in Euro Kiwi. It looked more interesting to me at the start of the week than it does now, but I do want to just let you know that the levels kind of remain unchanged. Here's what it looked like on the 25th. Nope. on the 24th. And this descending channel formation looked clean to me. And even on the larger daily chart, it came right through the median line, tagged it as resistance, and moved lower. So, here's what it looks like now. I guess this picture is worth 1,000 words. Euro key. We still held that. We went up for another check of that median line, held it again and moved lower, which for me kept the focus lower, as we said earlier in the week. But look what happened. It came right into that 62.46 level, which is that former swing high from here. And then we turned, and now we're right back up into the upper parallel. This was a break of the month of the weekly opening range. We tested the lows, and we came right back higher. So I don't really have a very strong directional bias on here. Relative performance in the euro and the kiwi both also don't have me too leaning towards any clear-cut definitive directional bias on this pair. But on whole, it's just a simple range at this point. Okay, support at 1646, 1645, 6245, let's call it, and then resistance. We're still going to be highlighting that 64.15 level, which also still converges on the median line that we looked at that daily chart. So it's either a breach above this that puts us constructive, or a break lower from here. And again, now you have to move up that target where the median line is, right along the line. That convergence happens right around 61.70, 61.75. All right. So bullish and bearish invalidation. If it holds, you see exhaustion and move back into the channel. You're looking for that drop towards the median line. Now, truth be told, if you put a gun to my head, I would rather, just on the emphasis on both biases, I'd kind of rather be on the long side of Euro Key, but they both don't look very, or specifically Kiwi doesn't look all that impressive to me on its own merit. So I kind of shelved this one, but I just want to give you an update that the levels remain unchanged. Same setup from earlier in the week. Okay, you just want to choke up that downside target to this median line confluence here now. So any questions here on Euro Key? I wish this one had a little bit more juice in it, but so far, range action. Likely to prevail to the close of the week, to be honest. Last but not least, that was Euro Key. That was number 8. Number 9, I just want to touch base on Euro Pound, a trade that we also highlighted, I believe, on that same update, if I'm not mistaken. Yeah, here it is. And again, just a major support level on the daily premise coming into 88. That was the 50% retracement of the yearly range. You had the lower median line parallel, which converged right there as well. And the focus was really this near-term consolidation that you're putting up against support, sort of your ideal plays. Consolidation just below resistance, or consolidation just above support, or just below support, or just above support, excuse me. And you look for that break to give you the validation. So deeper into the start of the week, here's what the confluence region looked like right down here, basically along Friday's lows. And you had this nice, again, consolidation formation just above support. Here's what it looked like on the 120-minute. Even cleaner. Okay, and here's what Euro Pound looks like now. First, the daily chart. I do want to show you that we are slipping, and I think this is what's giving me a little bit more confidence on liking the short side. Obviously, we've been bears on this, guys, for quite some time. Me and Jamie, because both of us are kind of both on the same page with reaffirming that we do like the pound on the upside longer term. And even if Euro does rally or find some strength, I think the pound strength should outpace. So longer term, we've been bearish, but we had to curb that bearish appetite as we head into 88. Basic support, 50% retracement, lower median line parallel. So then we went neutral, okay? And what happened after that? Again, that consolidation started to take form, and we wanted to see a downside break. We got the downside break. We checked it as resistance. So I do like the initial play. That being said, the overnight highs need to hold if this thing is heading lower. If this is just a basic break of support, check of resistance, this should hold. If we cross back through this, and specifically if we close back above it, that changes things. Not my favorite scenario, but it's the close of the month. I'm not going to put anything past these markets. So here's what it looks like on the intraday chart. Okay, it still looks good in my humble opinion. There's the consolidation. The one thing that you always want to see is when these consolidation break happen, you want to see the market run. You don't want to see this dilly-dally come back and kind of straddle that line. That's what's happening, and that's why it's making me a little bit more reserved. Now, again, the last test of the 50%, the 88 handle, did see a very nice reversal candle, sharply rejecting that. And my focus is lower against that high, like I said, for now. You got the weekly open just a tad higher at 88.17 or so. But basically, I want to see price hold below this, targeting the 200-day moving average, which is somewhere in the range of 87.16, and a key 618 retracement takes you down to 86.84. We just need to get some momentum started on this. It's just been, just hasn't had that clear-cut momentum signature that you want to see for any definitive price action buys, but the levels continue to hold pretty decent, so I like this lower below last night's high. It's the grandpa trade. We call it the grandpa trade for a reason, though. It may take quite some time before this thing does anything. It's a very slow-moving, slow-burning trade. So patience required. All right, guys, that's everything on my list. Are there any other questions that I can help you guys with? I'm not sure there'll be an update tonight, to be quite frank with you. Again, this end of the month, end of the quarter specifically type of deal, I just tend to stray away from completely. I've gotten burned way too many times over the years trying to trade these conditions. And also liquidity tends to tighten up a little bit as well. So even if you do get these quick stretches, your mind can start to get fooled. Now you're thinking, okay, let me hold on to this position. It's really running. And all of a sudden, before the end of the day, the whole thing retraces again. So just my point is be cautious, okay, heading into the end of the month, especially if you had a decent month. We don't want to kind of throw it all away because we're trying to press into the quarterly close. All right, biggest event risk left for the week is going to be the PCE, the personal consumption expenditure. Again, just on the back of all the commentary we've been getting out of the Fed and all the new developments, let's say from last week's release, it's really going to be dependent on the markets are going to continue to focus on the inflationary picture because that's what the laggard is of the dual mandate. Raphael, great to see you, says, Nat gas, please. Do I see a gap in opening today or am I wrong? Let's take a look. I haven't checked Nat gas in weeks. Let's see. I don't have any gaps per se. At least not on Owanda's feed. All right, so I remember this trade now. So the last time we were, I'm sorry, the last time we were covering this, we were that I recall at least was when we were underneath this median line, and we kept on noting that every time it dropped, the lower parallel was like rock solid. We came up to check that trend line resistance. Again, a parallel off the 2016 low, perfect resistance. The slam lower, perfect support. The open of this month did come off of a trend line that dates back to the 2016 November low, okay, and the low from this year. So this was a little contentious. Once we broke back above the median line, I was looking for the upper parallel, and then that's kind of where I lost interest. I don't know what to do with this because this was a break of the monthly opening range, which quickly recovered. So I didn't really know how to deal with that. Here's the break of resistance. You checked the support. Your new monthly open, which was right here, okay, for the September open, saw us pull right back. We checked that as support, and again, a false break of the monthly opening range high, pulled right back. So Nat gas, I don't have a clear-cut picture on this one, Raphael. To be quite frank with you, he says trading view is deceiving me. Then, Raphael, it depends on the feed that you're looking at. Okay, I'm looking at Owanda feed here. There's a couple of different feeds you can find for nat gas. So depending on the liquidity provider that you're looking at, it might not be quite similar. So let me take a look again at this. So this is the 200-day moving average. We moved right back below it. So I don't really want to stress this slope any longer. Let me go ahead and get rid of that. Let's see if we can't clean this up for Raphael here. Okay, almost a perfect 618 retracement before pulling back. And I just want to see what this looks like. Look, Raphael, you're coming up against the monthly open, and this is, I mean, this is for me a no-brainer just to not touch it. To be quite, if you're asking my personal humble opinion, you're basically very close to putting in a doji for the month. You know what I mean? So I don't really, that's not a trade I would get into on a directional bias trade. Range trade, sure. Trade the hell out of the range. That hasn't moved since the start of the month. But trying to take a stance on a bias, I just don't have it. I just don't have. This is the most benign momentum signature you can find, and this is where you get chopped up. So unless you're super near term and you're just playing like scalps, I don't have a strong opinion on this at all. I would want to see a consolidation break of the year's range, basically. This is the January open, obviously, but just using that late January high, you get a little bit more of a picture of a consolidation that's taking place before a breakout. Near term, again, let's scratch this for now. Hmm. Okay, so just off looking at this, kind of like you see a clear LE wave count that may be formalizing like a 1, 2, 3 extended longest trade, 4, 5, which would put me in a little bit more of a stance that this rally is a recovery within the downtrend. That interpretation, again, this is just a shotgun interpretation, Raphael. I'm looking at this for the first time in a while. That interpretation would suggest that you still have further downside to go. Um, and the 200-day moving average comes in pretty close to 305, basically. Yeah, it looks like a chop fest to me, to be quite frank, Raphael. Not something I'd be interested in. Again, if you put a gun to my head, I would say if this thing rallies towards the upper parallel, sell it again. But look for near-term support into 291. Wish I had a little bit more conviction on that for you, but just don't have it right now. Let me just see, is this trend line even viable? Yeah. Ooh, wait a minute. Almost identical slope. Look at that. All right. Boom. Bring that choke point even higher. $294 near-term support. Raphael says, I scalp it intraday, so yes, range trading. Okay, cool. Yeah, he says, thanks for your time. Super useful as usual. Cheers, Raphael. My pleasure, my man. Yeah, thanks for bringing it up. Again, it's not a really trade I typically follow, but always interested in checking out something new I haven't been looking at. But yeah, I would look for a gravitate back towards that median line. Look for a reaction there. Interesting trade, though. Any other questions before we wrap things up? Again, heading to the close of the month, guys, stay nimble. Use very light on leverage, and again, we'll have plenty of opportunities as we open up brand new month into October trade. Wow, it's October already. It's crazy. Okay, no other questions then. I will wrap it up here, guys. Don't forget, Jamie's on tap at 11 o'clock with the midweek strategy webinar to go over a little bit more of the longer term swing setups that we've been checking out. I'll catch you guys. If you're around tomorrow morning on Daily Effects, I'll be I'll be hosting the Foundations of Technical Analysis webinar. So definitely invite you guys, as always, for those free sessions. If you have any questions more so on technique or any technical indicators or anything of that um, magnitude, and then we'll be back for a free session on Monday, and then back here on SB Tuesday, Wednesday, and Thursday of next week. Guys, again, I'm not sure I'll have a piece out tonight. I really don't want to impress any new trades heading into the close. So unless I see something really compelling, take it easy tomorrow and enjoy the weekend. All right, Pete, you too, my man. I'll see you guys bright and early tomorrow morning. Till then, best of luck trading. Cheers.